Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave in the comment section below.
So let's get into the analysis. We're looking at a company that really represents one of the biggest paradoxes in the market right now.
Which is?
How does a company trade at this massive valuation when it has generated, well, effectively zero commercial revenue? We're talking about Oklo, an advanced nuclear developer.
Okay, let's unpack this because when we look at the core financials, the SEC filings are pretty clear. This is a pre-revenue company.
Right.
You see negative earnings, negative free cash flow. I mean, if a normal business had these numbers, that would be a huge red flag. Why is the market giving Oklo a pass here?
Because the entire investment thesis is built on what we call option value on execution. You're not buying cash flows today. You're buying the option to own massive cash flows, years down the line.
Assuming they pull it off.
Exactly, assuming they execute. So the losses you see now, those aren't signs of a struggling business. They're strategic investments. They're pouring money into R&D, into engineering these first-of-a-kind plants, and crucially, into navigating that complex regulatory licensing.
So the income statement is really just a map of where they're spending their capital.
Precisely. For a company in this kind of high-growth, high-capital phase, the balance sheet is really the only fundamental metric that matters right now.
And their balance sheet is strong.
It is. They secured a meaningful amount of cash from their SPAC combination and from follow-on capital raises. It gives them the runway they need to sustain this burn rate until the first reactors actually go online.
Okay, but here's where it gets really interesting for me. The market excitement isn't just quiet optimism. It's explosive. We saw this stock surge. What was it? Between 426% and a staggering 650% year-to-date in 2025.
Yeah.
That kind of move, that's not just hope. That feels like real conviction.
And that appreciation is transformative, not just for shareholder returns, but for the company's ability to operate. It massively strengthens what we call their equity currency.
Equity currency. Explain that.
Well, Oklo needs billions of dollars to build out these reactor fleets and the fuel infrastructure. When your stock is up 600%, every dollar you raise by issuing new stock costs you so much less in dilution compared to a competitor whose stock is, flat.
So the huge run-up actually de-risks their financing. They don't have to go take on a mountain of high-interest debt that could crush them if there's a delay.
That's it. It's a venture capital strategy playing out in the public markets. The market is essentially giving them permission to fund their growth with highly valued equity, which lowers the risk profile significantly.
Okay, so that explains how they can afford to build this. But what is it they're building that gets the market so excited? What's the proprietary advantage, the moat?
It's this really powerful combination of proprietary tech and some very smart strategic positioning. On the technology side, they're focused on advanced, fast microreactors.
Help us picture that. We think of nuclear plants as these gigantic structures that take a decade to build. What's a microreactor?
Think of it like this. Traditional nuclear power is like an old mainframe computer. Massive, custom-built, requires a city block. Oklo's microreactor is more like a modern, hyper-efficient server rack.
Okay.
They're designed to be factory-built, shipped to a site, which just collapses the construction timeline from a decade to maybe, 2 or 3 years. And they're much more fuel-efficient, smaller footprint, and need way fewer people to operate.
That completely changes the economics. So what about that strategic moat you mentioned? What's the biggest bottleneck for advanced nuclear right now?
It's fuel, hands down. The single biggest bottleneck for the entire U.S. industry is access to something called HALEU, high-assay, low-enriched uranium.
Right. This is the higher-grade fuel you need for these smaller, more efficient designs.
Exactly. It's enriched up to 20%, much higher than the standard 5%. And securing it has been a huge problem because the main global supplier has been geopolitically unreliable, to put it mildly.
And the U.S. hasn't had its own production.
Correct. And this is where Oklo's strategy gets, frankly, brilliant. They announced a massive $2 billion partnership with the UK-based Nucleo to develop advanced nuclear fuel facilities right here in the U.S.
$2 billion. That's not just solving their own problem, that's trying to solve an industry-wide problem.
That's the key insight. This move positions Oklo not just as a reactor builder, but as a strategic node in the entire advanced fuel supply chain. They're guaranteeing their own fuel, which de-risks their own schedule, and they could even potentially become a supplier to others.
Turning a risk into an
A
advantage.
huge competitive advantage.
And look, we have to talk about the people involved. The backing from someone like Sam Altman that's an intangible asset you just can't put on a balance sheet.
That soft power is absolutely crucial. It's not just about the money. That connection opens doors to more capital, sure, but it also helps them attract the absolute best engineering talent. And critically, it gives them access to the highest levels of government.
Which, for a company navigating the NRC licensing process that's an enormous, non-replicable moat right there.
Huge.
So the fundamental story is incredibly compelling. But has the market already priced all this in? What are the charts telling us about the buying pressure right now?
Well, shifting to the charts, the momentum is it's undeniable, and the pattern suggests it's this institutional conviction. Analysts have called the stock a nuclear powerhouse, and even after that huge run, you see really aggressive dip buying.
Like that recent spike.
Exactly. We saw that intraday jump of over 15% right after a bit of consolidation. That tells you investors see any pullback as an immediate buying opportunity, not a reason to panic.
What about the longer-term trend?
Structurally, it's very strong. The chart is in a golden cross configuration. That's a classic bullish signal where the shorter-term 50-day moving average crosses above the longer-term 200-day.
Which confirms what?
It confirms the bull market isn't just a short-term speculative frenzy. It's a deep, sustained, long-term uptrend.
Okay, so the trend is strong, but what about the immediate heat? Is it overheated?
The momentum check is actually pretty constructive. The 14-day RSI, the relative strength index, is hovering around 52.4.
So right in the middle, neutral.
Right. It's in the sweet spot. It means the stock has successfully worked off that initial exuberant froth without breaking the trend. It's still holding a bullish bias, coiled for the next catalyst.
What's fascinating here, though, is the short interest. It's high, around 33%, and it's been rising with the price. That just seems like a dangerous game for the shorts.
It creates a really explosive setup. High short interest shows their skepticism out there for sure. But if Oklo drops any major positive news, a big contract, a key regulatory approval, a massive short squeeze, those shorts are forced to buy back stock to cover their losses, which just pours gasoline on the fire. It adds a whole other layer of speculative upside.
Okay, so let's look forward. What are the catalysts we need to be watching for?
The most immediate one will be their next financial update. And since revenue is, zero, the market's going to ignore the P&L and focus entirely on one thing: guidance.
Right. Timelines, licensing progress.
Exactly. Updates on deployment timelines, their progress with the NRC, the economics of these new partnerships. Clarity on those non-financial metrics is what will drive the stock.
And the bigger strategic catalyst.
More details on that $2 billion fuel plan. We need to see site selection, CapEx phasing, a real timeline for getting that infrastructure online. That's what will verify their entire long-term deployment schedule.
And if we connect this to the bigger picture, the macro winds are just blowing so strongly in their favor right now.
Absolutely. The alignment is perfect. You've got the global push for decarbonization and the huge premium on energy security. That's baseline.
And then you layer on AI.
Then you layer on the tidal wave of capital flowing into AI-adjacent infrastructure. Data centers need massive, reliable, 147 power. Oklo's modular microreactors are perfectly positioned to meet that demand. They are right in the crosshairs of several huge thematic capital flows.
Which brings up the big question. Given this, astronomical valuation on future promise, what's the bear case? What's the wall of worry here?
The primary risk is, and always will be, execution and valuation risk. When you trade on infinite multiples, you are incredibly sensitive to any stumble in the narrative.
So any delay, any cost overrun.
Any regulatory setback could wipe out 50% of the stock's value overnight. The market's tolerance for error is basically zero.
And isn't it a bit reckless to assume that just because they have high-profile backers, the NRC is going to fast-track a first-of-a-kind reactor design? The Nuclear Regulatory Commission isn't exactly known for speed.
That is the toughest risk to handicap. You're right, advanced fast reactors have to navigate an incredibly complex and slow licensing process. And historically, nuclear scale-up almost always sees schedule slips. If the NRC demands years of extra testing, it could push commercialization way back. That risk is very real.
And the fuel risk is still there, even with the partnership.
For sure. HAEU production is still nascent in the U.S. If their $2 billion plan hits its own delays, that bottleneck comes right back.
But the bulls would argue that the key difference here is how proactively Oklo is attacking these risks.
That's the distinction between a hope story and an execution story. That $2 billion fuel plan is a direct countermeasure to the HAEU bottleneck. They're actively trying to solve the problem that could sink their competitors.
And the political climate helps.
Immensely. The pro-nuclear policy environment in the U.S., plus their influential network, it increases the odds of a favorable long-term outcome, even if the short-term process is slow. They're trying to control their own destiny.
So what does this all mean for you, the investor, looking at this? How do you even approach a stock with this kind of profile?
You have to understand that the thesis here is explicitly a multi-year hold, probably 3 to 7 years. It's only for investors who can stomach extreme volatility and are willing to underwrite that execution risk.
And the reward for that risk?
The reward is the potential for multi-bagger returns as they transition from licensing to actually deploying a fleet of reactors and generating cash flow. It's a classic asymmetric bet on the future of energy.
So the massive market confidence we've seen suggests investors believe Oklo is de-risking those core bottlenecks: fuel, financing, construction, faster and more effectively than its competitors.
And here's the final thought for you to consider. You have to ask yourself if that sustained premium multiple is truly justified by the speed of their announcements, or if the market has gotten ahead of the very real risks of regulatory and technological scale-up. Is the opportunity cost of having your capital locked up for years worth the potential payoff?
We hope this analysis gave you the context you needed to understand what is driving this complex high-beta stock. Be sure to hit that subscribe button if you want to stay informed on the next big market movers. We'll see you next time on Smart Wealth with Joshua.